Let's move on and get DK Joshi, economist at CRISIL, chief economist at CRISIL and a veteran economist actually, who's joining us now with a very interesting note. Dr. Joshi has come out with a note which talks about some observations he's made regarding the citizens and the country's working class and their savings versus borrowings behavior. And what is a bit, surprising and I would say a bit worrying also, Dr. Joshi, is that the borrowing rate, so growth rate is way faster or higher than savings. Talk to us a little bit about it. Is it a worrying trend or not really?
Happened since the pandemic struck us was that during the pandemic, you had no option to consume, so you were saving. After that, I think the savings slowed down a bit and the consumption picked up. So that was the broad trend. But coming to the savings part, I think there are two things happening here. One, the financial households account for about 60% of the total savings. So they are very closely tracked. Households save either in physical assets or in financial assets or in gold and silver. So what we have found in the last few years, the financial savings of the households have come down. Now, the financial savings are calculated as total savings of the gross savings of the financial savings of the household minus what they borrow. So that is the net financial savings. That's how it is counted. So that part has come down. But the physical savings, which means that households buying houses or other physical assets, I think that part has gone up. So there has been a switch in savings from financial assets towards physical assets. Now, why the borrowing, too much of borrowing is not a worry. The reason is pretty simple. I mean, if you look at what are households borrowing for, I think they're largely borrowing for acquisition of physical assets. So which essentially gives you some positive vibes in the sense that it's not being splurged on consumption alone; it's being used for acquiring assets. Now, why have I think the others? Then the question arises that why is this happening? I mean, why are households borrowing more? So there are a couple of reasons for that. I think number one reason is that the banks have a higher proclivity towards retail credit. And the less opportunity to lend to the corporate, so they have, and the retail credit is also has less delinquencies, etc. So that it has seen. So there has been a push from the banks. Second, I think we've also seen that the households now are borrowing more, particularly the younger ones. I think they have a very high proclivity to borrow. So they're buying houses, they're buying cars at much younger age. And then finally, I think the technology is allowing a lot of non-bank finance companies, fintechs, to reach out to people. So it has eased the provision of credit in that sense. So there has been a broad push towards making credit available, and there is a higher proclivity to take that credit. So that's why I think we've seen this unique thing play out where financial savings of the households have come down, the physical savings have gone up, and savings in gold and silver have also gone up, but not that much.
Dr. Joshi, I want to understand a slightly broader point from you. The GDP growth of the country is very strong. The affluence is also rising. Bigger, with the wider participation from women in workforce, and of course, new sectors creating a lot of jobs. Where is all this extra savings going on a longer term? If we see 5 to 10 years, with the size of the economy becoming much larger, do you see the savings pool of our country rising exponentially? And also, where do you see it go? Would it go towards financial assets more or more towards hard assets?
Well, I think there has been a tilt towards physical assets, I think, which is going to correct going ahead. I think we've looked at the data for the year that just went by. So the trends that I was referring to are for 22-23 because the data is not published beyond that. But we have got some information which tells you that savings are going to rise in 23-24. Both financial as well as, I think, physical assets are still being acquired. Housing is an attractive proposition. What's going to happen is, and what's happening currently playing out is that the households, when they put money in financial assets, they are moving a little away from the bank deposits towards higher paying assets like mutual funds or stocks, or for that matter, they could be acquiring more gold right now. So there is that preference change of preference taking place towards financial assets that offer you higher returns. That could even be small savings. The second, I think, is that the housing market has seen a lift after a long time. So housing has become an attractive proposition. So the households are also acquiring those assets. I think all these trends are continuing. Now, as far as the borrowings of the households are concerned, the central bank has tried to restrict credit in some of the riskier areas where I think the NBFC, etc., by raising risk weights. So there's going to be some moderation in the borrowings of the household. So the overall savings of the economy are going to rise, both in financial assets as well as to some extent, I think, in physical assets, slightly slower than what they were earlier. Now we can look at the savings pool in a number of ways. I think if I look at 23-24 for that matter, we have what we call a fundamental identity in economics, which tells you that savings minus investment is equal to current account. Now, current account deficit is expected at around 1% of GDP. Investments are around a little over 33% of GDP as per the most recent data. So the savings which you get as a residual are going to be higher than what they were in the previous year. So I think whether you look at the micro side of it or the macro side of it, savings do seem to be going up. And I think so, to put it simply, in 23-24, the domestic savings would have financed more investments than they did in 22-23. And I think something similar could play out in 24-25 as well.
All right, Dr. Joshi, thanks very much for joining us and sharing those insights from your latest piece of research. With that,
if you like this video, then like, share and subscribe to ET Now.